Hello, this is Brant Speshart with Steward Wealth Strategies, and thank you so much for joining me for just a few minutes for our first quarter economic update. So, one of the things we believe in, an educated client is our best client, but also our firm and our team being able to give you the best advice that is in your best interest to help you achieve your goals and objectives helps us best serve you. And I'm going to ask a quick favor at the start of this presentation. In the email that had the invitation for this webinar, there is a link. And I would just ask you to take 1 to 2 minutes to complete that information right now. And that way we can make sure that we have up-to-date information for each of you. And also so that we can know if there is a life event that we may need to reach out to you or update your financial plan in regards to. But also, I think all of us want to make sure our investments are properly aligned with our objective, our time horizon, as well as our risk tolerance. So these couple questions are going to help us do just that. And our team will reach out to you if there is a need, but we want to make sure that we give the best advice and you have the best investment strategy and financial plan for your goals. So please click that link, just fill in your information as far as your profile. Let us know if there's been any changes. And then as question 6 says, hey, have there been any significant changes as far as your life events are concerned? And then the risk and investment analysis process. So what are the objectives of your funds? Is it to draw an income and just preserve account value, or is it trying to maximize growth? And then how long do you need to keep those monies invested for your overall goals? You know, a lot of us for retirement, we need this money to work for the rest of our lives, but maybe you've got some college funds that you're going to be spending over the next couple of years. That's where I'm at right now. But then also, question 9 looks at, hey, what's the comfort level as far as swings? We all know investments have their ups and downs. We're all happy with the ups, but sometimes the downside is what may cause us to hit the panic button. Is there an extreme level to where you just can't sustain any more downside volatility? And then lastly, the last part of it is, hey, if you go through a big downturn, like what we saw in 2020 when the epidemic or the pandemic hit initially, what would you do? How would you react? What we would have done 4 years ago may be different than what we do today. So it's just like going to the doctor's office. We want to take your temperature. We want to see what your comfort level is. Where are you at? And then lastly, the last couple of questions are just, hey, if we do go through some volatility, can you write it out? And how long are you willing to write it out before you want to make a change? Because remember, investment philosophies shouldn't change or sway with whatever is going on in the economy today. Philosophies are approaches and are focused on the long term. But we also know that, hey, look, these are your dollars. This is your net worth. This is your life savings. And we want to make sure that we're best advising you and your family. So as I started out, we want to talk about Q1 of 2024. So knowledge is power. This is why we share these webinars and host events periodically and have newsletters. We know that the best clients are educated clients, because when we're educated, we have knowledge, we can make better decisions. I don't think anybody would argue with that. And we know there's a lot of opinion being fed to us on a regular basis, whether it's online, over the radio, talking with friends or family. Everybody's got opinions, but you want to make decisions that are in your best interest. We all want to be good stewards, and we want to hear those words, well done. So the markets in Q1 had a great start. The Dow was up, and remember, the Dow represents about 30 large companies in the US, but the S&P 500 is really a look at the top 500 companies roughly, and both of them had great gains in Q1. Now, by the time you watch this, there's already been some volatility in Q2, but, for the most part, first quarter this year was fantastic. And that's great because we just came off a really great year last year as well. But some of the headlines that we're seeing still involve interest rates. Interest rates have been volatile over the past, 20 years. We've seen some highs, we've seen some extremely lows over the past 15 years, but the Fed raised rates at a really aggressive level over the past 2 years. And, we are now seeing Fed funds rates up in the mid fives, which is fantastic for savers, a little more difficult for borrowers. But why did they raise rates so aggressively? It was to fight inflation. Inflation was around 9%. And where's it at right now? In March, inflation numbers were about 3.5%. So inflation is definitely moving in the right direction. Now, inflation doesn't necessarily mean prices have dropped. Inflation measures the rate at which prices are increasing. So inflation still means prices are going up, but they're not going up at as quick of a pace as they once were. And the Fed has said their target for inflation is 2%. So that's something good to kind of keep in mind. Whoops. Now, how does the Fed fight inflation? One of the key strategies is to raise interest rates. Interest rates were extremely low. And then all of a sudden in 2022, they started raising rates aggressively. And in 2023, continued to raise rates, not as quite as aggressively as they were the prior year. And then going into the end of the year, they started holding steady. And even this year so far have held steady. Now, the Fed has announced that, hey, we think we're going to cut rates 3 times in 2024. The most recent notes kind of indicate that, hey, we think it's still going to happen, but thinking is not knowing, and rates may be cut between now and the end of the year, but they may also be the same. So we can't predict the future, but we're trying to at least stay on top of things to know what to hopefully expect, so that we can best advise you. Now, in 2022, the stock market had a lot of volatility. It was the worst year in the stock market since 2008, but conservative investments like bonds also had a really rough year. And that's because the Fed was raising interest rates at such an aggressive pace that when rates go up, bond prices tend to go down. But when rates go up at a very aggressive pace, it causes a lot of volatility and downward pressure on existing bond prices. And that's affected a lot of conservative investors that year as well. Now, if rates do get cut, do know there could be an increase in existing bonds out there. So there could be a little bit of a bond rally if rates are cut. Right now, we're looking at very nice yields for conservative investments like treasuries. 5, 10, 20, 30 years are all over 4%, which is nice. Now, I know a lot of folks, may not necessarily own long-term treasuries. It may be part of a portfolio if you have a bond fund or something like that in your portfolio, if you're a more conservative type investor. But most of us have money in the bank. A lot of us have our emergency funds. Maybe some of you are cash heavy right now. The national average as of April 1 this year for a 12-month CD is about 2%. Bank money markets are about 0.6. Now, I know a lot of us may earn a lot better rates than these. Remember, these are national average. These include large institutions, but also credit unions and smaller banks where rates may be a little more favorable generally. If you ever have questions or if you're a rate shopper, feel free to reach out to our office to see if we can help you, or maybe we can point you towards a financial institution that other clients are using that may, pay better rates than what you're receiving right now. Our best clients are making sure that it's not just their investment portfolio, that it's not just their financial plan that's working, but all areas of your financial life are working for you. Because look, we're not greedy. We're not trying to have as much money as possible, but the more money we make, that's more money we can give. That's more money we can spend. It's more money we can have fun with. It's more money we can bless our kids or grandchildren or leave a legacy or make community and kingdom impact with. So be a good steward with all aspects of your finances. Now, when the Fed started raising rates aggressively, they really felt like it could lead us into a deep recession. Now, what we've seen, though, is unemployment really still looks really good. Employment numbers still look really good. So we've kind of entered what they think might actually be what's called a soft landing. So, Will there be a market correction? A market correction is when the market drops 10% or more. You know, if the Fed doesn't cut rates, we could see a market correction. We're not going to try to predict. We always want to focus on the long term. We don't want to go with the flavor of the day or just, we know the markets are going to be volatile daily, weekly, monthly, quarterly, and annually. But a well devised investment strategy based on your goals and your objectives should take that into consideration. And even if there is a correction or a pullback, let's look at some returns historically when there has been a correction of 10% or more in a quarter. So look at these different quarters here. We've had strong double-digit growth rates many times in Q1. And there have been some pullbacks, as you can see in the last column. But if you look at returns for the rest of the year, historically, if you get in and hang on, even though there may be a pullback after a great Q1, historically, look, 90% of the time, if you just held on that year, you had a great year. There's always going to be that outlier. But just think about how investments in the market has done since you started working, since you were born, since you got out of high school to where you are today. A lot of wealth has been created for patient and diligent investors that have stuck with a long-term strategy. But I know it's easier said than done because we're all seeing the headlines. We see inflation headlines, we see interest rate headlines, but we also see headlines about geopolitical unrest. And we are all anticipating the headlines that are going to come from the US election this year. Volatility is inevitable. Volatility is the price you pay for long-term growth. Have a long-term investment strategy. Focus on your objectives and your goals. And if you have questions or concerns, reach out to our office. This is what we're here for. This is why you have a financial advisor or financial planner. Sometimes the advice we give may not necessarily be what somebody wants to hear, but the advice we give should be in your and your family's best interest. So here's our takeaways. Inflation is still a concern, and the Fed has indicated there could be rate cuts, but the key word there is could. We don't know exactly what will happen this year until this year's over. There could be a market correction, but remember, market corrections are just part of the normal and healthy investment cycle. Volatility is part of investing. Stay the course, focus on the long term. And as the Scout motto says, be prepared. So I want to end this with an attitude of gratitude and just say thank you. Thank you for blessing us with the opportunity to serve you. It is an honor. Thank you so much to all of you that continue to send your friends and family members our way, fellow Dave Ramsey fans, church members. We love talking to people, giving second opinions, but primarily our objective is to serve you. And thank you for that blessing. But I do want to remind you, please take a minute right now, if you haven't already, click on the link in the invitation, complete the quick update. It really will not take but a couple minutes. Go with your initial reaction. Don't overthink it. Submit that. Our team will look at it. They'll see the results. If a need is there for us to reach out to you, we will reach out to you. Thank you very much. Have a wonderful spring and soon to be start to summer. I'm looking forward to it. God bless you.